Sweet. Okay, so welcome to the Sunday pre-market webinar. We do these every week, so if anyone is new here, welcome, welcome. We've got a few things to discuss, nothing too new. We did have basically a complete market shift this week, which is a little bit strange, but again, it wasn't anything out of the ordinary too much that we couldn't deal with. So what we've got is the US has confirmed 25% tariffs on Mexico, Canada. Obviously, we had that 30-day waiting period where we sort of didn't really know what the outcome was going to be, but it seems like the tariffs are going ahead at 25%. We also have a 10% increase on China. So what this is doing is adding pressure into the market. So we've got essentially got trade wars going on. Also, if you see me pausing, it's probably because I'm just going to let some people into the webinar, so don't mind that. So we also have tariffs on Europe, essentially with the automobiles, which actually I'm not sure how that affected the DAX. It's not something I pay too much attention to. So yeah, it looks like the DAX did initially have some downturn. We saw the same downturn on euro dollar as well, but it's not being sustained too much. So there's not much damage there, but it is something we need to start factoring in now. So the US dollar is actually expected to start strengthening, which it has done, obviously, that we can see here. So since, yeah, basically Wednesday last week, we saw the dollar start to create fresh highs from the previous lower high. So this is expected to continue now again off the back of sort of trade wars and essentially a risk-off market. If we're going to go into central banks, the Federal Reserve is expected to cut 50 basis points this year. Those two cuts, that 50 basis point will be split into two cuts of 25 basis points expected on June and September. Now, the caveat there is inflation. So we've got sticky US inflation, which could delay those rate cuts and even reduce them down to one. We're not 100% sure yet, but that's what we're expecting. So we're currently on the plate for two, but it could be delayed further into the year or even reduced down to one. But again, we'll have to see and take it on a data perspective. In terms of the ECB, we all know that the ECB is currently in a cutting cycle. So if we just have a look at euro dollar, this has been a huge weight actually on the euro dollar as we've got a very, very strong central bank divergence there. So the ECB is expected to cut 25 basis points in March and possibly another 25 basis points in April. So that's two meetings back to back or two cuts back to back. The Bank of England. Now, this has been a bit of a surprise for me, actually. It caught me a little bit off guard, and that was probably my fault because the pound isn't something that I've really been trading very much or really pay much attention to because I just don't like the UK. I don't like the economy. So I normally either sell it or stay away from it. That's the two rules I have for the pound. That's just personal preference. But the Bank of England essentially needed to cut rates, which they did do, and that helped bring the gilts down. But the problem is now that we've got sticky inflation in the UK, which is making it very, very likely that the Bank of England is essentially just going to hold rates until much later into the year, probably around Q3 to Q4. So I wouldn't really be looking for many sells on the pound at the moment. I also, again, personally, I don't like buying the pound, but shorting it at the moment isn't really an option in my book. The Bank of Japan. Now, the Bank of Japan is interesting. We're going to go into the sort of Japanese economics in a little bit more detail, actually. So the Bank of Japan, although they're hawkish and everyone is expecting rate hikes by the Bank of Japan, is not quite that straightforward because we should all be aware by now that the Bank of Japan move very, very slowly. It's not a case of hike, 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 or even hike, hold, hike, hold. It's more a case of at this point, we're expecting one hike this year, which again, it's not the worst thing. Everyone knows the Bank of Japan moves slowly, so it's not necessarily a super negative factor for the yen strength. Excuse me. So what we're going to do is have a little look into some of the dynamics on the yen now. So if we go to COT history, which is smart money positioning, so we look at how smart money's been positioning in the yen recently. I put this in the Discord, but for anyone that wasn't aware or didn't see it, essentially we're seeing a huge increase here now in yen longs. So we can see back, this was the end of January. We were essentially 50-50. So it was 49.7% long. Now we've increased to 69.39% long. So if we look at the long percentages here, we can see we've essentially increased from, down at 43% to 69%, almost 70. The net positioning has also flipped from pretty bearish to very bullish. So it seems like smart money is now catching on to the same idea that we've got in terms of long yen. And again, I'm not saying that I was there before them, but it seems like we are pretty much on point with timing in terms of being with them in that aspect. Now, the yen saw a little bit of a struggle last week. Again, the markets were pretty erratic. In my view, they didn't really follow much of the macro. It was more of a panic fire sale, essentially, is what I would call it, or a very sort of panicked move by investors rather than it being a sustainable thing. So I'm by no means expecting the yen to sell off from here. I would expect possibly either a higher low to form, maybe some slight downside to continue, and then continue to the upside, or we get a complete correction of last week and we continue and break through this resistance level. Either way, I'm still bullish until I've got a reason not to be, and at the moment I don't have a reason not to be. So my first real target here on the yen is at the previous daily high, which would be at, obviously, depending on what index you're actually looking at. For me, it's 0.072005. Obviously, this sort of previous double top on the daily time frame. Beyond that, we can obviously take it on a sort of how the data develops from there. But in terms of technicals, that's the first place I'm looking at really to start possibly booking some profits. Now we're going to move on slightly from the yen. We're going to go on to what was it? Oh, gold. So gold is tricky. And the problem I have is I'm fundamentally bullish on gold. So I would love to start being a buyer in the market. The problem is I just don't see smart money leading the way at the moment. So we've the situation with gold, we've still got inflationary pressures, which is leading demand into gold. We've still got the Chinese central bank, and we've still got emerging market central banks buying gold. Um, and we've still got fear in the markets. We've still got the Russia-Ukraine problem. Obviously, the peace talks. I think a lot of us actually were talking about those peace talks in the Discord because it was a bit of a bit of a clown fest, to be quite honest with you. So that's still a factor in the markets. The Middle East thing is still prevalent. It's not necessarily gone away. It seems like the news headlines have calmed down, however. So I'm not necessarily bearish on gold right now. But if we look at what institutions are doing, they don't really seem overly optimistic. I'm fairly sure, actually. Let me just double check because I'm thinking of old data. Let me just make sure I'm getting my facts right here. Yeah, so it looks like their long holdings on gold have actually gone down. So they were 83. That doesn't look right. Hold on. Because the candle says they've gone down in longs, but the percentage shows an increase. Okay, we're going to ignore that. So I am still bullish on gold, as I was saying earlier. We've still got a bullish reading here on the Edge Finder on gold, so it's not very bullish, but it's still got a very strong reading of 8. Again, I've already mentioned the driving factors behind gold. The H4 looks very, very solid here. Two pretty strong H4 candle closes into the end of or into market close on Friday. So if we can see some sort of continuation of bullish momentum, again, if we can see some sort of reversal of what we saw last week, that would be great. If not, then the next sort of area of interest, I would say, is down at the February lows at 27, yeah, basically 2,700. So we'll see how that goes. I'm not going to be in gold too quickly. I will need to see some sort of confluence or some sort of defining entry sort of condition, if you will. So the next one that is sort of on and off my watch list is the FTSE. So I hate the FTSE generally speaking. It's a very, very sideways moving market. It's not something in fact, I think the last trade I took on the FTSE was probably 2 years ago. That's really how much I don't touch this market. So again, if we just look at the way the daily time frame moves, it's essentially just sideways. You can get runners, but yeah, it's pretty rare to be quite honest with you. But we are primed actually for a long here if we can see some sort of breakout or if we can see a rejection, a retest and continuation. I might start looking to go long on the FTSE. So if you guys had a look at, I'm actually just going to pull it up so I can reference it, is the weekly research that I put out here in Trade Ideas. We do actually have the FTSE long. Let me just find it here. Yeah, here, FTSE long. So the FTSE has a heavy weighted defence sector, which we know that the UK government has just increased their spending on defence. UK inflation remains sticky, delaying Bank of England rate cuts, which could financially support financial stocks and insurers. If GBP weakens due to delayed rate cuts or trade tensions, the FTSE 100 companies with global revenues could benefit from currency translation effects. Dividend-paying FTSE stocks remain attractive. So the FTSE is looking pretty good. So we will see if we can see a continuation of this run. If not, I'll stay away. Again, it's not something I really am overly interested in trading, but if it moves, if I'm bullish and it's moving up, I will look to buy it. Pretty simple stuff. Now, the dollar Swiss, I took a pretty big L actually on dollar Swiss 2 weeks ago now. So I'm a little bit cautious to jump back into too quickly. But again, if we're actually really looking at two positions here. If we do see the market sort of reject here, this would be essentially a perfect break and retest to continue to the downside if we can see the dollar lose some of the steam we saw last week. So shorts are actually pretty valid in terms of technicals. But if we're following my overall bias, which is bullish on the US dollar, bearish on the Swiss, then longs are looking great here. If we can see a very clean break above the previous high and break out of this level of what is currently resistance, previously support. So dollar Swiss looks, yeah, pretty much primed either way. We could probably get some short-term sells actually if we do reject that level. CAD yen also looks great. Again, we've just had tariffs applied on the on Canada. We've got the yen that is proving to have some longer term strength. Again, we've seen some small downside recently, but we can sort of lay that on the side again. This would be more of a long term positioning. So I would actually ideally like to see a larger pullback on all of the yen pairs. I think they're all pretty much moving sideways at the moment. So if you look at Euro yen, Swiss yen, CAD yen, there just isn't much momentum either way. And the majority of them are sat at pretty major levels of support on daily, weekly timeframes. So it would make sense to see a pullback, but if the yen is willing to give up that much strength, I don't know. We can't really say yet. But the only way I would be willing to add into any yen pairs, so even the ones I'm already in, like Swiss yen, Euro yen, the only way I'm going to add in is if we do see a pullback on the daily time frame. Because at the moment they're looking a little bit extended. I don't want to be the guy selling it right here. I think that's a little bit early or a little bit late, depending on how you look at it. Next up, we have got the dollar Canadian. Now, again, going back to the tariffs applied on Canada, we've got the dollar that is expected to do very well off the back of all the tariffs and trade war, and even just the general risk-off mode the markets are in. I think we're primed to go long. The problem is, how have we missed it? And half of me thinks we might have done. Now, the annoying thing is, I was looking at dollar CAD and I put the bank trades in from Prime Market Terminal into the Discord quite often. So some of you that pay attention will have seen the dollar CAD sort of trade idea being popping up recently. Now, I didn't do it because, I was just too hesitant. That's my bad. But what I'm optimistic for here is a rejection of top of the Bollinger Band. We've got an overbought RSI. This was all a very, very quick and aggressive run. So can we see some sort of pullback, some sort of small correction before continuing? I would like to say so, but again, we'll have to obviously see how the market reacts, how it opens, how it continues on Monday. But any pullback on dollar CAD, I will be looking to go long into the top of the wick high. So this was formed when we had the initial news of tariffs on Canada. And then we saw a huge rejection back down almost straight after when we heard about the 30-day waiting period to see what was going to happen. So I think it's a pretty realistic target to have. We just need to wait for that pullback. Now, the euro pound also seems great. So, although earlier in the webinar I said I don't really buy the pound, or I very rarely buy the pound, or actually I don't buy the pound really. Euro pound is actually the only exception, really. I will always really look to go short euro pound, especially given the current climate. So we know that the UK is tariff safe. it doesn't, we've not really heard anything regarding tariffs on the UK. It sounds like we've got quite a good relationship in terms of the trade. So that's obviously a positive factor. The euro has just had tariffs put on them. We've got the Bank of England holding rates, the ECB cutting. So overall, it just looks like a really, really great trade. So I'm just looking for some sort of pullback. Now, euro pound is a very difficult market to trade on price action terms, which is why I love to dollar cost average on euro pound. So if any of you guys remember, I was actually shorting all of this move, and it got a little bit hairy, actually. I think Marco was in here. I think he was doing the same thing. I saw him doing it on Twitter. But yeah, euro pound, I was shorting all of this move. And this would be very, very dangerous to do on actually most of the pairs. But the behavior that euro pound shows is very, very supportive of dollar cost averaging shorts when we have huge upside moves. And now, when I say huge, this is a daily time frame, so obviously it's relative. But the way this market generally moves is we have um, typically something that will drive this market up heavily. Now, it's never normally sustained. Obviously, we can have trends to the upside of like any market, depending on the dynamics. But again, the general behavior is normally we'll have an aggressive move to the upside, followed by a more sustained move down. So dollar cost average shorts are perfect. But again, the reason it doesn't sorry, the general behavior doesn't support normal technical analysis, sort of support resistance type things. So, if you're going to look for shorts, just keep that in mind, which is why I'm not looking to short it just yet. So if it gets this high, I won't short it. I will wait for the next catalyst to cause a larger upside move, and I could be waiting a couple of weeks, could be a few days, could be a few months. I don't mind, but I will look to short the next impulse run. So we will see how that goes, but that's the plan. Now, oil is the next one. So I was long oil, I think it was last week or the week before. In hindsight, terrible idea. I knew it wasn't a great idea, but I wanted to test my luck, and my luck wasn't in my favor. Now, obviously, luck's a pretty controversial word to use in trading, but it was fine in that case. It was very oversold. I was looking for a pullback and just didn't get it. Now, in terms of short term on oil, OPEC is looking to stabilize the price, but it doesn't seem to be doing anything. The oil market is very bearish. We're still seeing smart money reducing their long positions, adding into short positions actually on oil. Let me see what the COT is actually here. Yeah, so we can see US oil really reducing long contracts, really adding into short positions. The net positioning is reduced by 3.76%. So obviously telling us that they're selling oil. So if we're just going to follow this trend, follow what smart money's doing, keep it very, very simple, it makes sense to look to short. Now, I've heard all sorts of different levels for targets. I've heard things like $60, $65, many different things. I don't really have a target. I think if I was going to sh go short on oil, it'd be a case of just placing a sensible stop loss and trailing it down and following price rather than having a hard profit level. Because I really don't, oil's not something I trade very often. I'm not a huge guy on oil. I don't really know the behavior in terms of where the target could be. So I think in this case, trailing stops would be the best idea. Now, euro dollar, my favorite pair, short, as we have been doing for many months now, since sort of September last year, we've been short in this market. So again, sort of just looking at last week's move, it was very sporadic. We saw quite strong upside moves followed by a very aggressive move to the downside towards the end of the week. I would expect some sort of upside movement just again following very familiar with Eurodollar. I trade it all the time. I would expect some sort of correction back up, maybe not back towards sort of 1.529 where the highs are, but maybe just back into this previous high or even just back to 1.05 flat. Either way, I will look to start placing in shorts. Now, again, I will be dollar cost averaging this one. So if you see me doing that, feel free to adapt and place the trade how you see fit. Um, there is a slight chance we actually come higher towards 1.6, oh sorry, 1.06. I would view that more of a short squeeze rather than it be necessarily a macro driven play. So I just don't see any um any reason that smart money would actually take long positions on euro dollar unless it's more of a short term, momentum trade rather than it being a speculative macro play. So again, we've got the ECB cutting, we've got the Federal Reserve holding and then possibly cutting towards the end of the year. Again, maybe late Q2, Q3, Q4, not anytime soon. So we've got that. We've got the US dollar benefiting from the trade war. We've got Russia, Ukraine applying pressure on euro, benefiting the US dollar. So we've just got all of these things that are just so beneficial for euro dollar. Final target will be parity. I've been looking at parity again since sort of, I'd say November, December. It's been a long time I've been looking for that level to get hit, and it's still not there. I do see it coming. And it sounds like a lot of institutions see that level coming as well. It's just a matter of time rather than if, or, a when rather than if. So essentially, if we see the pullback, I will be shorting heavily, and I will hold those shorts very likely until parity. I'm obviously going to micromanage it in the meantime, but parity is the sort of the end of time target I have. And that brings us right back around to gold where we started. So, is there any questions or anything you want me to look at specifically before we end the webinar? Let me know. You can unmute yourself as well. You don't have to stay muted. I don't want you guys to sort of sit in silence. You can unmute yourself and we can have a chat. Oh, silver. Yes, actually, I was meaning to go over silver and completely forgot. So this is my positioning on silver. Looks messy. It's not that bad. It's not as bad as it looks. The position sizing is manageable. The overall view I have on silver is still bullish, but it's not ideal right now. So I'm still happy to buy silver, and the reason is because I'm happy to hold it. So I'm very, very confident that we'll see sort of 35, 40. I mean, obviously that's quite a wide range, but 35 to 40 within that zone within this year. So the way I'm looking at silver now is if we continue to drop from here, I will close the top position, look to add in lower, and continue closing out higher positions, adding in lower, adding in lower, adding in lower, and hold the position. But that's because I'm happy to that's how, I'm happy to be in a position trade for a few months if I need to. In terms of short term, it does look quite bullish. It's the same thing as gold. I think if we can continue to respect the support, I think we're probably going to head back up, maybe 50%, maybe slightly, lower, give or take. But I would be looking for something like this. So maybe a target within 618. So actually, what price level is that? So 32.2 to 31.8 would be sort of the you know, possible rejection area. If silver is now bearish, what I'm trying to say is if we reject this, show bullish momentum, and we reject here, then I would start looking to maybe take a short position as a hedge. But if we blast right through, then I would suggest the uptrend has continued or will continue, and that was more of a panic move by investors, as I said at the start of the stream. So I'm not concerned, but yeah, just be obviously if you're in silver, just be very vigilant on how the price reacts at this current level because this is, if it breaks here, the next stopping point is $30, and if it breaks past $30, I think we're in a bit of trouble, and that's when I'll start thinking to actually just close out of silver and call it a day temporarily. Um, so yeah, again, just be vigilant. My personal direction is bullish, but of course, the markets will do what the markets want to do. So yeah, that's pretty much it. Actually, let's just quickly have a look at what smart money's doing for silver. Um, Give me a second here. Let me pull it up. So yeah, they've slightly reduced longs actually. Oh, have they? Yeah, slightly reduced longs here. So we went from -4, they added in quite a lot of longs, then they've reduced longs and reduced shorts. But that gives them a net positioning or net long of 75. So their net longs have actually increased, but their net positioning has decreased. So it's not really optimistic. It's slightly bearish, but yeah, nothing overly dramatic, I would say. Actually, something I forgot to do is just quickly have a look at the news rundown for this week. So let's just see what we've got going on. Uh, So we've got CPI for euro. So obviously inflation data. This will be relevant for rate cuts if we get lower inflation. So if we do get we get the forecast of 2.5, obviously previous 2.7, lower inflation increases the rate cut narrative. So that would be very bearish for euro if we get a low CPI. ISM manufacturing, if we get 50.6, which is forecast, that's not great, but it's not bad. Anything. So with services and manufacturing PMI data, what you want to do is typically see a number above 50. If the number is above 50, signals a strong manufacturing and or strong services, which is essentially output and obviously manufacturing of the economy. So above 50 is great, but if it's lower than previous, it's not the best. But again, above 50 is fine. The yen, we've got the Bank of Japan talking or the speech, so that will be interesting. So we'll probably have to pay close attention to that one. We do have Swiss CPI, so again, this will be very, very important for our trade on Swiss yen. If we see lower inflation, again, that's perfect. Signals rate cuts, which will be great for Swiss yen shorts. But if we have an uptick in inflation, that might dampen that rate cut narrative slightly. ADP, no one really cares about ADP. We've got, again, services. I already spoke about services, so I won't talk about it again. We've got the Euro Summit. Again, that would be interesting to pay attention to. Uh, Euro monetary policy statement, again, very important to listen to or pay attention to. That will give us a few more signals on what Europe has in store. Unemployment claims for the US. If we see a downturn in unemployment, that will be another beneficial factor for the US dollar. Negative for gold and in equities. Uh, then we've got the almighty NFP and unemployment rate. So NFP is expected to tick to the upside actually at 156. If we do get 156, obviously bullish for the dollar, bearish for gold, bearish for equities. Same thing with unemployment rate. If we get anything below 4, that would be bearish for gold, bearish for equities, bullish for the dollar. Anything above 4, vice versa. And then we've got Fed Chair Powell speaks. So again, pay attention to this one. But guys, that is the rundown for the week. There is not much else for me to discuss. Let me just double check. Yes, that is it. So guys, I will see you all very soon. I appreciate you joining me. As always, feel free to talk in the Discord, ask questions if you need to. This was recorded, so I will put it in the Discord pretty soon. Have a good week. I will see you all later, and don't get margin called.